How high do you think the interest rates could get to? What's the potential range, you think?
So let's talk about history. In 1970 was the last time we saw inflation this high, or in the late 1970s, closer to 1980. And in that time, we were facing double-digit inflation. And in order to fight that inflation, the Federal Reserve then said, either we can fight the slowing economy or we can fight the inflation. Similar issue. It was called stagflation. Stagflation is a very weird economic concept where you have a slowing economy and you also have rising costs. Mm-hmm. So it's like the worst case scenario.
Sure.
And so during that time, they said, okay, we have a slowing economy and we have high inflation. We're gonna say, ignore the economy. We're gonna bring down inflation because that will save our dollar. It will save the currency. And so what did they do? They jacked up interest rates, and mortgage rates were almost 20%.
What? When was the last time it was over 10? You remember?
In the 90s to early 2000s, around that time.
Really?
It was 90s probably.
Yeah.
It was the last time it was over 10.
So if it went over 10 now, what do you think would happen?
If the Fed continues to jack up interest rates to bring it over 10%, home prices will have to go down. I mean,
because people won't be buying.
You can't afford the home at the same interest rate today. And that would also significantly hurt businesses because the businesses that are relying on debt, they're going to see a big pain, a big crunch. And so that's where the Fed is facing a big dilemma. They're hoping that inflation will go down. But the question is how? They're hoping that it's still just supply chain. They're hoping that it's still just Russia. They're hoping that it's still just other issues. But the one issue they never talk about is the money printing and the stimulus. And that's the concern. If we really want to get serious about fighting inflation, we might have to get more aggressive. And if we get more aggressive on inflation, it's going to hurt the economy. Even a previous Federal Reserve chairman said that we need to crash the markets because we need to get serious on inflation because we don't want to deal. A currency crisis would be even worse than just dealing with a recession. And so that's where it's what is going to happen? And are we really that bad? And the last thing I want to mention on that is the money printing that we saw happen in 2020, it has just come out that it also led to the biggest financial fraud of America ever.
Really? Why?
Because people abused the system.
Oh, yeah. They lied about things. They got free money they shouldn't have gotten.
It was the biggest financial fraud in our history. And the reason why, it was from all angles, but if you look at the PPP, which was the loan to businesses, that if you have employees, you have rent, if you have business costs and you're shut down, you can get essentially a free loan from the government and you don't even got to worry about paying it back.
It's crazy, right?
And if you are taken out, I think it was less than $2 million, you don't even have to explain what you use the money for. You have no justification, you can just borrow the money. So what happened? Well, some businesses used that money for good. And some people said, well, I don't have a business, but I wonder if I can look up a registry of businesses and say, oh, these are some businesses, and just start applying under these business names and say that I need the money.
Wow.
Billions and billions and billions of dollars were stolen. Where did the money go? Lambos. They went into nice cars, they went into nice homes, and it's just coming out now. And so we saw tens of billions of dollars go to just complete waste. Even in the unemployment program, now they're starting to realize that some people who were getting unemployment didn't justifiably get the money or shouldn't have gotten the money. And so they were sitting at home playing video games when they should have been working or could have been working. And maybe they were doing something that they shouldn't have.
There was no incentive for them to work because they were making just as much, or more, almost, or more.
Or even they were working and still getting the unemployment because they were doing something illegal. And so it created all this fraud. And so it's like, we had all the stimulus without really any regulation, without looking into what we're doing with it. And it created the biggest financial fraud. And now who's paying the price? The average person. Regular people are paying the price through inflation. And if you're just now learning what inflation is, you're really probably getting pinched by it. And, and it sucks because we're never taught about this. When are we ever taught about inflation? When are we taught how to fight inflation? It's so unfortunate.
Yeah, unless you're in like an economics class in college or something, maybe.
Well, look, I tried to get into business school when I was in college. I needed to take Econ 1 and Econ 2. I almost failed Econ 1, so I couldn't get into business school. So I don't even know if the economics classes teach this.
I know.
So
I'm curious. Okay, let's say it goes above 10% interest rates at some point this year. What would be your next 3 moves? Like if you see it creeping closer there, what would you be investing in or taking your money out of, or what would be your next 3 moves?
Sure. So I think the more liquid and more active investments would be your liquid investments, things like stocks, things like cryptocurrency. So again, if you look at 2008, when the stock market crashed, started going down, it bottomed out in 2009, and then it started going up. So the 2008 crash happened, started in 2007, and it bottomed in 2009, and then it goes up. And by 2012, the stock market had fully recovered. But in 2012, that was when the housing market bottomed. So the housing market bottomed 3 years after the stock market crashed.
Wow.
And why? Well, the stock market has a lot of panic, it has a lot of emotions, and you can oversell very quickly because it's all emotions, right? When you see the headlines on the news talking about what's happening in the markets, people get scared and they
Sell
start
today,
panicking.
right now.
And then you see assets go down, and you go, oh my God, my assets down 30%, I want to sell my stocks, and then it keeps going down. And so it's a very emotional driven, and it can happen essentially in the blink of an eye because you can buy and sell stocks in a second. The housing market doesn't work like that. The housing market has a much longer lag time because it can take easily 30 to 90 days to buy and sell a home. And so you just understand that the housing market moves significantly slower. And so if interest rates, say, went up to 10%, I have a strong hunch that the stock market would get hurt bad. And I think there would be a lot of opportunity there. But
In the stock market.
In the stock market.
To invest then in the stock market,
Yes,
yeah.
and that's if you believe in the American economy. I do. If you think the American economy is going to be strong in 10 years, 20 years, then there's opportunity there for you. And so what that would mean for me is looking for strong companies that are not going into bankruptcy, that I can find opportunity to purchase. And if you're not interested in investing in individual companies, if you're not willing to spend the time doing that, because I think the majority of people should not be investing in individual companies because
Right.
they're not willing to put in the time, effort, research, and have the psychology to do that,
Yes.
then you can just look into an ETF that gives you exposure to the general stock market, the S&P 500, which is the biggest 500 companies on the stock market. And now you're just investing in a piece of America, and you're able to buy it at a discounted price. So that's what I would say there. And then if you're talking about cryptocurrency, you have to first, I'm not here to tell you believe in crypto or don't believe in crypto. That's not what I'm here to do. If you believe in crypto, I invest in crypto. If you believe in the technology, you have to be willing to weather the storm. And you have to be willing to understand that, price makes changes the sentiment of crypto. Because when prices of crypto go down, people think crypto is fake. It doesn't matter. When prices of crypto go up, people think, oh, it's the future. And so
Right.
if you really want to be an investor, you have to be able to cut through that emotion and cut through the noise and understand, okay, I like the blockchain, I like the technology. I'm not investing in the meme stuff. I'm investing in something that has actual value that can actually create change, and then that can be an investment for you. But now, in terms of timing, I want to make sure I mention this because a big mistake that happens, and this happened in big part in 2020, is you can't time the market.
Right.
Nobody knows when the bottom is. And it doesn't make sense trying to time the bottom. When the 2020 crash happened, I was making videos on YouTube. And one of the things that I was saying when the market was just collapsing, I said, look, here's what I'm doing. I'm buying on the way down. I buy in phases. I don't know when the bottom is, so I'm just going to keep buying. When I do my research now to find the good companies and the investments that I want to own. So I'd spend my time when times are good to find the good investments. I already know what I want. Now, all I'm looking for is a good price. I'm looking for a good entry point. When the price goes down, hey, it's on sale, I'm going to buy. If it goes down further, I'm going to buy even more. So every time it goes down 10 to 15%, I buy, and I buy more aggressively as it goes lower. And when I was making those videos, I got flooded with comments of people saying, why would you buy now? The market is collapsing. It's going to go way further. Wait for it to drop. And I kept saying, look, I can't predict the future. I don't know when the bottom is. I'm not trying to time the bottom. I don't know how long we're going to be at the bottom.
Sure.
What happened? The Fed opened up the money printer, the X factor, I like to call it, and it shot back up. So if you were trying to time the bottom, what happened? You missed the opportunity to buy, because then it starts going up and you say, no, it's too high, I don't want to buy. And then it keeps going higher and higher and higher and you just missed it.
Yeah.
So instead of trying to perfectly time the market, either do a dollar cost average system where every week you just buy a little bit of your investments that you like, whether the market's up or down, doesn't matter, passive, consistent, automatic, you let it do its thing. Or if you want to be more active and you want to look and research the companies and the investments that you want, make your list and just look for a good buying opportunity and buy on the way down.
Is it, in your opinion, would you buy a home when interest rates is over, when interest rates is over 10%? Or would you feel like, even though you're getting at a massive discount, you're paying more every month, would you consider that, or you just wait until interest rates go down?
So I look at home buying very differently than the majority of people. I look at buying a home the way I buy a shirt. For me, a home is not an asset, it's a liability. So what does that mean? I want to buy a home because I want to create memories.
Yes.
I want to buy an investment property or an investment because I want to make money. So if you're buying a home because you think, oh, I want to get rich because of my home, I think you're looking at it the wrong way. Because you should be looking at your home as, I want to make memories here, I want to live here, and I want to grow my family here, and I want to spend time here. If that's the reason why you want to buy a home, what you should be paying attention to is not what's going on in the markets, not what's going on with interest rates, but instead what you should do is say, can I afford it?
Right.
And what does that mean? Can I afford the down payment? Can I afford the monthly payment?
Property taxes.
Can I afford the property tax?
The fix-ups.
The fix-ups, the move-in costs, and then you move in like I need the furniture, the upgrades, all that.
Man.
So if you can afford it, then you buy. If you can't afford it, if you're stretching yourself too thin, you don't buy. Because what happens to so many people is you get sucked into trying to time the market. But again, if interest rates drop and you own a home, you can refinance.
Right.
And so remember, it's understanding.
So it's almost good to buy it when interest rates are high if you can get the house on discount, and then if in a year or two the interest rates drop in half, you can refinance.
Just make sure you can afford it. That's the biggest thing. You have to be able to afford it, because if you are stretching yourself too thin, going paycheck to paycheck to live in a home, you're hurting yourself, because now what you're doing, you don't have the ability to invest in other places. You cannot invest your money.
Do you think people will be able to actually buy a home in 5 to 7 years?
It depends on what the Fed does. If the Fed cuts interest rates when we go into a recession, so our economy slows down, the Fed starts cutting interest rates, mortgage rates go back down, you're going to see a bigger flood of cash into the housing market, and that will create a bigger wealth gap, and it will make it significantly more difficult for the regular person to buy a home. Home ownership will become a real American nightmare, because it will be so difficult for the regular person. We will turn into essentially a renter nation.
Wow.
Where homes are owned not even by regular investors,
but corporations.
Corporations.
Yeah.
They've been buying up. I was reading
Blackstone's been buying up a ton of homes.
Yeah, BlackRock's buying like
BlackRock or Blackstone.
Yeah, they're buying 1 out of every 4 homes in certain neighborhoods.
That's crazy, man.
Yeah, and so
because which means they believe people aren't going to be able to afford them, and they're going to have to rent from them.
Yes, and so it's a crazy times to understand that, which is why, again, I look at the home like a liability. Can you afford it? Yes, then buy. If not, then don't stretch yourself too thin. I used to be a real estate salesperson. And the reason why this is so important is because when I was a salesperson, what they say is, you want to tell people this is their biggest investment of their life. So buy a home that you love. Now, again, real estate agents are not bad people. Bankers are not necessarily bad people. However, you have to understand the messaging. If I tell you this is the biggest investment of your life, what are you going to say? I want something bigger. I'm willing to stretch a little bit thinner. Yeah. I'm willing to go a little bit further because I want that home. And so what does that do? Well, it makes the banker richer. It makes the real estate agent a bigger commission check, and they walk away, and now you have to deal with it. If you can afford it, great. But if you start to struggle with it, you're the one that has to deal with the problem by yourself. And so what happens for so many people is your home is a money pit until you sell it. And then you have to hope that you sell it for a profit. Because there's no guarantee, right? We don't know where home prices are going to be in 5 years or 10 years. I can't predict that. I don't know what the Fed is going to do. And so the main thing that you have to understand if you're thinking about buying a home is ignore the markets. Ignore what's going on in the world. Can you afford it today? And please do me a favor, okay? I very rarely try to tell people what to do, because I feel like, I want you to be educated so you can make smart decisions for yourself. But the one time that I really tried to give people, like I say, don't do this, is when it comes to adjustable rate mortgages, because they've been making a huge comeback now. Because now the interest rates are 5.5%, people say, I missed out on the opportunity to get a low mortgage. And now I have been seeing a huge growth of adjustable rate mortgages, because now banks will say, don't pay 5.5% on a home, pay 3.7% today, and it's a 5-1 arm. Meaning, after 5 years, it's going to readjust. And then your mortgage payments will readjust. And if it goes higher, don't worry, you can just refinance out. And it is so risky because we don't know where interest rates are going to be. If they go up, and they go up significantly, and now you're like, oh my God, let's just say mortgage rates are 10%. I don't want to pay 3 times more for my mortgage, from $800 a month to $2,400 a month. I can't afford that, so let me refinance. Well, if you do that and home prices have dropped and you can't refinance because the bank says, well, you don't have enough equity in the home, I'm not going to refinance you. And then you can't sell because you're underwater. Well, now you're in a tough situation. So pay a little bit more, get that fixed rate mortgage, because if mortgage rates do drop, refinance.
Right.
And lock it in, because other countries in the world don't always even have the option to do a 30-year fixed.
Right.
We do. But an ARM, an adjustable rate mortgage, is significantly more risky. The only time that I would say an ARM is okay is if you are like 100% confident that you're going to be able to pay off the home during that initial teaser rate. Because if you cannot, then you are taking on a huge gamble with the home that you live in, with your family's livelihood. It's one thing if you do it with an investment, but with the home that you live in, avoid that extra risk and just lock in the rate